Alex, welcome to the VIGS Institute here in Vienna. It's a great pleasure to have you here. And after our meeting in 𝒆𝒂𝒂𝒂𝒚𝒔, it's nice to see you again.
Thank you very much. Thank you for having me here.
And, you know, I didn't know this, but we have this common root and interest in both having been part of the GEM project.
Yes.
Which was one of the original interesting research projects on entrepreneurship globally that was multidisciplinary, it was data-driven, and it was international. Mm-hmm. It was a very, very interesting project. And as the world has evolved, we find ourselves here again contemplating the future. And you must know something about American baseball.
Yes.
Right? So, you know, there was this great catcher named Yogi Berra for the New York Yankees.
Yes.
And then he became the manager. Mm-hmm. And they were in the World Series. Mm-hmm. And the reporter asks him, says, "Yogi, are you going to win the World Series?" Yogi says, "You know, sir, making predictions is really hard, especially about the future."
Yeah.
Right? So here we are in a very turbulent and interesting world. And one of the questions, and this is going to be the topic of our workshop today, right, is the future of money.
Right.
And, you know, one of the interesting things that has happened, and it was accelerated since COVID, is many people don't carry money anymore.
Yes.
And especially here in Austria, and we actually just came back from Cape Town, South Africa. Mm-hmm. And in many places there are signs, no cash accepted. Mm-hmm. So in some sense, the way we make payments has radically changed. Mm-hmm. It's become digital and electronic. Mm-hmm. And then right there, this leads to another question, well, what is the future of money? And can you just sort of give me some thoughts on this?
Mm-hmm. Definitely. I think the key things about no cash accepted, except is actually illegal. Because cash is a legal tender.
Right.
They have to accept it.
Right.
But we see a lot of all this notice because people begin to just don't use cash, right? The trend, I would say that largely we see it in China first. Because that in China, even you have cash, really you can't go anywhere. And you have card, okay, for example, foreign card. Right. You cannot go to the second tier city because they don't accept it. They only accept their own Zifubao, okay, or WeChat money. So that is actually the kind of trend, and everybody will just inherently accept it. Now, the thing is actually propagate everywhere else. So in Asia, in Singapore, we realize that people don't accept cash, but they don't mind accepting the China payment system, Zifubao. So that is actually quite shocking because you will always think that there's something that's sovereign about money and within your ecosystem, and why are you accepting something else? But I want to highlight that there are two things down here. That in terms of money, actually there are two groups of people. One group of people using money for transaction. Mm-hmm. So I buy, I sell. Basically, that's group of people, tangible, physical economy. Right. But the other group of people, they buy and sell money. So money become a product to them. Mm-hmm. So they are forex people, etc. Now this group could be minority, but they are very, very influential. We talk about the first group of them first. In a lot of time, okay, the money for the common people no longer managed by their bank. For example, that in Asia we have something called Grab, which is equivalent to Uber. Now, Indonesia hairdresser, usually he will take an Uber, go to his client place, and then do up the hair before she go for her dinner party. Mm-hmm. All right? So the guest, the client will pay her money into her, their Grab account. And then after that, she will use that money to pay for her Grab ride. So everything to the person, the hairdresser itself, you don't see the money. You don't even see the bank. Everything is managed in this particular system that is not even the bank, right? So it's actually a transport system. So very often that we look at this one and we say that the one that make money in this system is actually not the rider or driver. It's actually the payment system.
It's the platform.
It's a platform.
It's the matching where the money is made.
Correct. So the money will flushing and throwing inside down there. You don't get to see it. And in the future, definitely such thing will happen. And as we move a step further, we are looking at stablecoin. Stablecoin is a transaction that happens between two wallets, which also means that we don't have to go through the bank. Now that actually creates certain fear because in Singapore, we have a lot of people that are depending on this financial center status. We are dealing with all the money, all kind of money. The moment that the money don't need to go to the bank, what happened to these people's job?
Right.
So there's actually a whole series of impact that we are still not very clear about. But we are closely watching and say that, what can we do? Well, money is going digital. Money is going into this form of crypto that don't need bank. What should the bank do? I think that is a huge question everybody is thinking. In fact, a lot of banks is trying to get into the stablecoin business. But can they? Ultimately, we do not know.
We don't know.
Yes. Yeah.
Interesting. So money itself, or actually not money, the payment system that we have been used to now for, right? It's an interesting question, right? We have been either used to this for thousands of years, even though we had barter years and years ago, but then we had gold coins, silver coins, and we had paper money, and now we're into digital currency. And so this has really evolved rapidly. How is the banking community accepting this? And you know, I saw this interview with central bankers about this, and they were like unsure. They were, you know,
Yes.
I was like, you guys should have a good idea. They said, well, we don't really know.
Yes. I think ultimate, on top of payment, is actually settlement.
Right.
Settlement between banks, settlement between countries. So there's a really established system of settlement.
Right.
But right now, okay, if everything goes digital, they will settle on chain.
Right.
So exactly the banker and the banks will not know where is their place. So we are seeing that just on stablecoin alone, Citibank, JP Morgan, begin to think of they also want to issue the so-called stablecoin. They are backed by their deposit.
Right.
So in that way, they still more or less stay relevant because they still be able to attract the deposit and still be able to do something. But then the concern about for the consumer is that, do I really want to put my money there? Do I need to put my money there? Because after all, there's so many possibility of stablecoin. And this a lot of country right now is actually working on how am I able to off-ramp my stablecoin into my fiat. But ultimately, that if you have a stablecoin, do you still need fiat? I think this is actually a much bigger problem that the bank will have to figure it out, because ultimately they are the one is actually managing the digital part of it and the physical part of it. So they have to work with the country, work with the central bank. Eventually, the regulation will help them to maybe stay relevant, but may not be for a very, very long time. Yeah.
You know, if I go back to my college days taking an economics class, we learned two things about money. It's a medium of exchange and a store of value. So I can see how digital currency has become the medium of exchange. You know, we went from checking accounts to sort of a digital checking account, and now we have this mobile checking, sort of a check, but so that part is clear. How does this digital currency in the future of money affect the function of money as a store of value?
Actually, a very good question, because that if you are using it as a transaction medium, you are not really storing the value.
Right,
It's just temporary holding.
It's a temporary
and you
holding.
hope that the money don't fluctuate.
Right.
Because if you are going across country, cross-border transaction, that's the reason why everybody want to use, for example, US dollar.
Yeah.
Because by itself, US dollar is stable, but when you exchange your other thing, that is where the fluctuation come about. When you start looking at it, is that the US dollar is basically occupy about more than 65% of the transaction right now happen.
Right.
And you make it very easy for people to say, instead of using US dollar going to the bank, I will just buy the stable coin and transact it, right? So I would say that adoption of US dollar transaction into stable coin, stable US dollar transaction become very easy. So that's number one. But that will create another problem. The problem is that for the country that is weak in their monetary policy, for example, some of the Southeast Asia country. Now, I'm doing all the trade and having a US dollar stable coin. If my neighbor is willing to accept US dollar stable coin, I will transact that. So instead of doing this and versus that, I will convert to local and back again, right? So the local currency usage will diminish. Then what happened to the country itself? Their fiscal, sovereignty, monetary sovereignty. These are the two big questions that nobody able to answer, but we're looking at a trend, something could happen, right? So these are the issues that is on top of just really understand about the individual storage of value. But when I store all my wealth in US dollar, my value is different from local value anymore, okay? So I think we see some of the weak country exactly that the people will go for Bitcoin, go for US dollar instead of buying the local currency. I think that is one of the key issues that people are thinking. And eventually, for people to store, they will not store in the money, they store in the physical item, for example, a house, a gold, silver, and something, until we really figure it out. Yeah.
Interesting. Bankers make a lot of money.
Yes.
What I'm saying, banks make a lot of money, right? In Vienna, you want to go to a cash machine, take out 100 euros. There's a bank wants 7 euros.
Yes.
You know, so there's a huge amount of money in banking, in fees at all sorts of levels. Now, I suspect on these platforms that facilitate the matchmaking and exchange, there's also a lot of money to be made.
Yes.
And my question is, was there more money being made in banks, or will there be more money being made in these platforms?
As of right now, more money in the bank.
Still, yeah.
Still. Because even, for example, if I'm on crypto, and I want to off-ramp it into my normal fiat, the bank will ultimately, our Singapore bank, for example, will ultimately charge between 5 to 7%.
Right.
Just for a fee.
I know, just for a fee.
Yeah, so they are not doing anything, but that is a fee.
Yeah.
All right. So on top of the exchange loss, people will still lose another 5 to 7% as a fee.
Yeah.
So for the crypto speculator, they know that they have to make sure that they earn more than 7% before they want to off-ramp it.
Yeah.
So bank is still making a lot quietly, and unfortunately for most of the people. Now, platform do make money, but platform make money in two aspects. First aspect is that, of course, a platform fee, a small little transaction.
It's a small fee.
Yes, so that people are willing to use them to transact because they actually need not charge any fee.
Right.
Because it's within their own ledger.
That's right.
Yeah, maybe fee for a little bit of computer time, but ultimately they don't have to. But what they make is actually the float that they collected. And that float for them to do lending, investment, etc. And that will make quite a lot.
Yeah.
Yeah, but still not to the scale of the bank yet.
Yeah, and because it's all computerized and it's all on a platform, they can charge a tiny amount, and with billions of users, they can actually do quite nicely.
Yeah.
Where you've actually lowered the cost of. Is it fair to say this lowers the cost of using money?
Yes, definitely lower cost.
Yeah.
One of the very unique things is about, for example, we talk about platform like Uber in Singapore, Grab. Grab in Singapore is, I won't call it a monopoly, but they are the only one down there.
Yeah.
Which also means that they are able to transact across different institution bank, right? So everything happens within their platform, all the more there is no exchange,
Yeah.
right? So their fee can be very low
yeah.
if they choose to.
If they choose to, yeah.
Yes, correct. So it's actually a lot of tuning. Is that if I raise my fee this much, will people still use it?
Right.
Yeah. Until the people feel the pain, say, no, I'm not going to use it.
Yeah.
Then they will lower it.
Yeah.
So ultimately, yes, there's still a lot of money in there, a lot of fat. But I would say that exactly as what you have mentioned is that it will actually encourage a lot of usage of it. So now we have something called GrabPay. That I go to the restaurant, I still just tap, and that's it. It's done. Not through my bank. Yeah. So the system is now in place.
Let me ask you a question. It's a different question, but it's related, and we get this question in all of technology. Who are the companies that are making the physical equipment to make all this work?
Oh.
Is it interesting? I don't know, so it's not a...
Yes, equipment, a lot of them are basically a mobile phone.
Yeah.
Okay, the core is still a mobile phone.
Right.
If you go down to Shenzhen, Dongguan, the factory down there, they have a whole selection for you to choose. So the equipment are more or less, I would say, generic.
Right.
Right, with all the encryption, everything done.
And then what's unique is the software.
Correct. The software and the system,
Right.
and what is the server behind calculating,
Right.
enticing the people to come in, as well as doing the transaction.
Yeah.
So in fact, the play that they have is that different people have a different transaction, even on the same product.
Yeah.
So they will entice the people through all the algorithm and start making the people want to use it, right? The convenience of it.
I know.
For example, you go to a restaurant, all of a sudden he pop up and say, why don't you pay with GrabPay? Because I will give you a discount, a coupon, or whatever. By sensing that you are there and you're about to make a transaction from your phone, everything pop up, right?
Yeah.
So I would say that it makes it very frictionless for the people. You fish it up and you just pop it up and say, why don't you use this one? And easily you just tap and that's it, it's done. Right?
So, you know, I have a WISE card. This was developed by Barclays. And this is like a dream come true. You can have money in any currency in the world. And you press 2 buttons and I can switch my dollars into euros. And they charge a tiny amount. You know, usually if I had to go to a bank to do this, I spend a half a day there and I end up spending 50 euros.
Yes.
And then if I send money in the same currency, they don't charge anything.
Right.
You know, and the convenience of this mobile money is just unbelievable.
Right, yes. A lot of people that travel, from Asia, we will use either Revolut or this something called U-Trip, exactly as why the WISE card is. The rationale for people to use it is because it always offers the best exchange rate.
Yes, and the same thing with the WISE card.
Correct. So the spread is so small that it's almost instant, because a lot of the time when we use credit card, we hate it that you only know exactly how much you spend at the end of it on the bill, and depends on the highest exchange rate.
Right.
So that uncertainty is immediately removed.
Completely eliminated,
And so we use the same, like your WISE card, called U-Trip card, and we just conveniently, happily tapping.
And since it's instantaneous, that spread is almost infinitesimally small.
Correct, but they still make.
Yeah.
So
Yeah. Interesting. You were just in Nairobi, you told me. How advanced is this digital payment system in Africa?
Okay, they have two. Okay, one is a conventional system that we are familiar with, the Visa card.
Right.
All right, so we usually charge up our U-Trip and we pay. So that is one part of it. The second part is that they have their own digital payment system like M-Pesa.
Yeah.
Right. It was previously run on 2G mobile, SMS.
Right.
And it slowly progressed. It has a slightly different way of doing things, but it's the same as the WISE card. You charge into the card first.
Right.
And the transaction fee is very, very small.
Yeah.
And it's running on a very old system, the SMS system. Secure enough. And the best thing about it is the SMS, nobody wants to hack it.
Right.
So it's secure by no attacker would like to attack it.
Yeah.
And people are getting very familiar with it right now, and it actually spread a lot faster. In the East Africa, I would say that they've done very well. The only grab I have is that because it's actually owned by a telco.
Who owns it?
Safaricom. Okay?
Which is what?
A telephone company, a telco.
From where?
They are in Africa, I think based in Kenya.
In Kenya. Okay.
Yes. So the fun part is that a telco will focus on usage of telephone versus making money from the financial transaction. Mm-hmm. So they are not really focused and really push too much of it. If they have done that, I say the M-Pesa will be cover the whole Africa, maybe Middle East, could also go to India, or rather the Indian Ocean island, but they are not yet.
Yeah.
Yes.
So it's interesting, right? We tend to think of, this word has now become less used of developing economies, but Africa and previously China made huge leaps in this digital transactions. How did that happen? Was it indigenous knowledge, or was it the West going in? How actually did this emerge?
Well, what I'm seeing right now is that a lot of African leaders right now previously being trained in Europe.
Right.
So they take a scholarship to be in Europe, in France, and etc. But now, increasingly, a lot of them being trained in China.
In China?
Yes, China. So they have scholarship. They went to the party school, for example. So now a lot of them speak Chinese. Mm-hmm. And then they will bring in the so-called the knowledge and technology.
Right.
Because
so you know what's really interesting, back in the days when we had East and West, a lot of Africans went to the Soviet Union to study.
Right. Yes.
And they studied engineering and mining, right? These things that were then considered valuable state-of-the-art. And now in the last, I guess I'm going to say 20 years, they've been going to China, learning digital technology, et cetera, and applying that back home.
Right.
Very interesting.
Yes. So I would say that because of this, they begin to expose to a lot of the latest, I won't say technology, but more mechanism. Mechanism as in a sense that, take for example, right now they're thinking about it, okay, if I have a mine, do I want to spend time really excavating the ore, etc.? Or can I just set up a license and then I tokenize the license and then I sell the token? I would have the money already. Now with the money, I can choose to really do the digging, or just with the asset, the money is already printed and be used. So these are the new thinking that we see emerging in Africa, and they could be moving very, very fast, right? So the future of the so-called African money could be very, very different, right? But it could be what we call RWA, real world asset, but it's tokenized, backed by the real world assets. Such are the things that happen. We are yet to see tokenization of virtual asset. For example, some of the rights of fishery right, for example. This zone, I allow me to do fishery, and this is a license. I could tokenize it also. But I don't think they reached that stage yet.
Can you explain what tokenization is?
Okay. It's an IPO. Initial public offering, exactly the same. So you take the assets and then you fractionalize it. So each fraction have a value. And I mint a token which is a crypto. And I attach to it. So it's a smart contract to it. So now the smart contract have the value of this underlying asset and I can sell it. And because it's digital, just like any transaction, that can happen online. Right. I can go to Binance and get them to do it, and I can list it down there.
Interesting.
Right. So it's conceptually there's no change. It's still the same IPO concept. Securitization of underlying asset. So it's the same.
Is this digitalization, or fintech, as a lot of it is called, is this a part of the discipline of finance, or is this really something outside of traditional finance, education, and
It is outside.
it's outside?
It's outside.
That's
You see,
what I
it
thought.
started off as a technology.
Right, it started in the
looking for-
technology,
Yes.
and then it spread into the finance, and it didn't come out of finance.
No, it's not. Yeah.
Yeah.
It's a technology trying to find its own use.
Right,
Okay, we call it solution looking for problem.
yeah,
And then they realize that finance is natural, and then we do something about it,
Yeah.
and they progress down there. What fintech really do is that they kind of like automate or make it easy for
Right.
what we used to do it.
yeah.
That's about it.
I mean, the whole idea of technology is to make things easier, cheaper, quicker,
Right.
more accurate. You know, you probably remember, I used to have a checking account, which I still do, and I would get a statement, right? And then I would go through it to make sure it was accurate. Today, we don't record anything, right? Your statement comes, I maybe glance at it, and I assume that the computer added it up correctly.
Yes. And very soon, you will use AI to check it.
AI will check it.
Okay, so we for me is that usually I hate to check all these things.
Yeah.
So we have an AI to glance through and see anything unusual.
Right.
This is not my spending pattern, and the AI will ask me.
Right. This is, I think the banks are already using this. You know, I remember once I had some fraud on my account, and I called the bank, and I said, I never shop in Hyattsville. You know, I don't go to these stores. And I suspect today AI will look at this,
Yes.
and it'll say, this is outside your spending pattern.
Right.
Yeah.
Yes. Because AI somehow is useful in that they will be able to spot the irregularity.
Right, yeah.
And for us, that's that we will just toss it to AI and say,
That's right, yeah.
help me to check through it. Yeah. It is convenient, but AI is not foolproof.
Right.
Because that occasionally, that is what the scammer will do. They charge a very small amount.
Right.
Okay, a few small amount, you don't get to see it. AI will look at it, it's small amount, maybe it doesn't matter, because your average a lot of times could be a lot higher, and those things get slipped by.
Yeah.
Yeah. So eyeball on it is still very important because it's your money.
Yeah, yeah. Well, Alex, thank you very much for a fascinating interview. And I look forward to the discussion in the conference today.
Thank you. Thank you very much for having me here. Okay. I really enjoy the conversation because this is a lot of past experience, but what is happening right now.
Yeah.
And I think there's wonderful time that I can spend with you.
Okay,
Thank you very much.